Joining us now, Adam Patty, CEO of Index IQ, and Tom Lydon, editor of ETF Trends. Tom, let me start with you. You're going to have to do an awful lot of convincing to make me buy a commodity ETF right now.
Well, Mandy, we were talking bubble when gold was at $1,000 an ounce. And today, going forward, who's to say that it can't go higher? The average investor out there didn't have an opportunity to participate in past commodity booms. But today, with ETFs, you've got all varieties from gold, silver, base metals, agriculture, energy. And these choices are going to continue to grow. And I think as this boom moves and we see more and more signs of inflation, this is a trend that's not stopping anytime soon.
Adam Patty, I want to see if you agree with what Tom said, the trend won't stop. And if you do agree, where do you buy this? If you're pro-commodity, if you think this thing's going to run some more, how do you play it? Where do you invest?
Absolutely. I think the trend is unfortunately just starting in some cases. You look at food inflation, for instance. There's 6.9 billion people on the earth today. In 2050, it's forecast to be 9 billion. The prices of food, corn in particular today, and wheat are being driven both on the demand side and the supply side. On the demand side, you've got a wealthier emerging markets consumer. You've got increased biofuel use. And on the supply side, there's only so much farmland to be used. So what do? We like the agribusiness small cap stocks, which is why we brought out the first global small cap agribusiness ETF, ticker symbol CROP, C-R-O-P, which actually is a very interesting way to play this whole food inflation.
Tom, I would like to know how much these ETFs themselves are to blame for pushing commodity prices higher, because in some cases, for example, like a silver ETF, they often take the lion's share of the stuff that's being dug out of the ground.
Well, it's a good question, Mandy, and the answer is nobody really knows. There's surely global demand for commodities right across the board. But if you look at, for example, the gold ETFs and the fact that there's thousands of tons of gold in vaults in London and Switzerland, who knows to what extent that's actually driving prices or not. But to the great degree, I think based on where we are on inflation and the fact that central banks are actually buying gold, I think it's a pure demand play at this point.
And what do you like, Tom?
Well, again, speaking of gold and silver that everybody's talking about, I like the miners, specifically silver miners, the Global X silver miners, and also the junior gold miners, Market Vector Global junior miners, and also along with crop that Andy just mentioned, we've also got the power shares, DBA and agricultural and commodities play, and then finally U.S. oil. If you are upset about paying higher prices at the pump, here's a way to play with USO.
Adam, just tell me specifically on your food and agriculture play, which is quite interesting, maybe because it's not gold and silver. How specifically do you invest?
Oh, well, you buy our ETF in terms of are you talking about our crop ETF and what's in there?
Yeah, I mean, just tell, right, first of all, what's the ETF for people watching this and they want to diversify, heaven forbid, out of gold and silver.
Sure.
And they like your argument. It's an interesting take on the world food supply. What's the best way to do it?
Absolutely. I mean, our crop ETF, CROP, is you buy that ETF, and what it gives you is access to 52 small cap agribusiness companies across 19 different countries. At 25% of the portfolio is actually in farm and production companies. That whole farmland issue is really a major problem on the supply side, and this is how you gain access to that.
All right, thank you very much. Very interesting, Adam and Tom. We appreciate it.
Thanks,
Up next, folks, earnings season kicks off today. We're going to find out how